Hello everyone, welcome to the ERCOT Spring Outlook for 2016. My name is Rod Williams, I'm the team lead here. We're going to take a couple of minutes just to let any late joiners come on the call. I'll be back in about 2 minutes. Thanks. Okay, so I think we're going to get started. Thanks everyone for joining us today. My name is Rod Williams. I'm the ERCOT team lead. We're going to run through the Spring Outlook for 2016. Just to walk you through the presentation. Before we start, if you do have any questions over the course of the presentation, there's a question box there. That you'll be able to type any questions in, and then at the end of the session we'll go through the questions and answer those that we can on the spot. If not, we'll come back to you shortly after the presentation. So just to walk through the agenda, we're going to start with a recap of winter 2015-2016. Josh, our meteorologist, is going to walk through some of the demand drivers of last winter as well as the spring weather outlook. He's also going to talk about the wind outlook, including some of the build-out that we're seeing in ERCOT. My colleague Keith Fairbrother is then going to walk through the Gen outlook, including the seasonal assessment. He's also going to look at some high-level congestion points as well. I'm going to summarize it, and then I'm going to talk a little bit about our SEER model as well. This is a new model platform that we've been developing internally here at Genscape. So to start off, wanted to walk through let me hand over to Josh, in fact, who's going to talk about the winter 2015-16.
All right, yeah, thanks, Rod. So overall we did have a rather warm winter across the footprint. The image on the right is the temperature anomaly map, and overall most of the footprint was about 2 to 4 degrees above normal. December and February carried the strongest warm anomalies. We saw a little variability in January. That's where we saw our 49 gig demand peak. But overall, we had consistently warm weather, consistently bearish demand. And taking a quick look at precip, what's interesting is we actually had below normal precip. So overall, in summary, we had a warm winter and we had drier than normal conditions, which it contrasts pretty well with a typical El Nino winter. Usually when you have an El Nino, you have cooler than normal temperatures and above normal precip. So we did see some kind of anomalously warm weather through the winter. And taking a quick look at demand, looking at the number of what we call strong demand days, which I have set at 45 gigs, we only had 14 days with peak load over 45 gigs. And that's in contrast to 29 days last winter and 39 in the previous winter. So we had less than half days greater than 45 gigs compared with last year. And then looking at the winter peak, 49.3 gigs this winter. Last winter we had 56.8. So the year-over-year drop in peak load was about 13%. And if you look at the year-over-year drop in winter peak load across all of the power markets in the United States. ERCOT actually had the most significant drop. So through the winter, ERCOT gets the most bearish award. Yeah.
Thanks, Josh. So I'm going to just talk a little bit about pricing by month. So we saw a very mild winter, starting with December 2015. What you're seeing here is the gray areas, the peak demand against the backdrop of real-time pricing in blue for North Hub and day-ahead pricing, and then the dart spread, the bar charts there. So as you can see, we averaged about $19 in the day-ahead, 17 in the real-time, a positive dart spread. If any of you caught our recent wind blog that we put out, that 12/8 day, you'll see the one spike in pricing there, the real strong standout day. Really, again, wind-driven by a sudden ramp out of wind generation. Moving through into January, similar story. Those prices around $19 or 21 for the day ahead, close to 19 for real time. A little bit of a tighter dart spread there. Loads beginning to creep up into the mid to high 40s towards the end of the month. Again, that big price spike again around mid-month and towards the start of the month, again wind-driven. So wind seeing really the source of a lot of volatility in ERCOT at the moment. Moving into February, we did see very, very soft pricing in February, averaging around $16, $17 day ahead real time. Pretty tight dart spreads as well. And again, 223, driven by a loss of wind generation. So really this winter in particular, I think a lot of the opportunity was driven on a system level by missed forecasts in ERCOT's wind forecast, and some of the associated congestion that came along with that. And definitely encourage you to check out our wind blog that Josh, who's on the call today, and Connor, our other analyst, did, looking at some of those risks. Then lastly, moving into ORDC. So obviously with very, very weak pricing, we saw pretty minimal ORDC. About 95% of the time, we saw zero ORDC throughout the season, and about 0.3% greater than $1 there. So really not a great season for ORDC, any scarcity pricing, as you can imagine, with those very, very soft prices that we saw. Now I'm going to hand over to Josh, who's going to give some information on the spring weather outlook.
All right, yep. So taking a look at our spring weather outlook, we are calling for slightly cooler and slightly wetter than normal conditions. Even though El Nino is on the decline, it still remains rather strong. So we are going to have still a kind of a residual El Nino signal to the spring outlook. Some of our key analog years are 1958, 1983, and 1998. And I would say key forecast risks are definitely warmer and drier, in particular both March and May. Just looking at how the pattern has evolved in the last couple of weeks, looking at the forecast in the next week. Next Tuesday we'll have some 80s, maybe even some 90s into South Texas. So, March is starting to trend warmer, and some of our climate models also look a little bit warmer for May. So we definitely, even though we do have a slightly cooler and wetter than normal outlook, we do favor warmer risks. And then moving on to the next slide, which is the monthly breakdown, March, April, May from left to right. Temperature anomalies, generally the same look. We have a degree to 2 degrees at most below normal, both March, April, and May. In terms of precip, April is favored to be our wettest month, so we may have some thunderstorm-driven downside. That's going to be something to watch as we head through the month of April. If we get a lot of showers, a lot of storms, that could be bearish for demand. And then May, on the bottom right, we do have some below normal precip, which is generally bullish for load. If we don't have to worry about cloud cover, if we don't have to worry about thunderstorms, that should allow load to build quite nicely. All right, so looks like our slides might be slightly out of order. Go to the next slide if you don't mind. Yeah, so I guess we'll bounce over to wind. We do have a few other slides in there, but just talking about wind, overall we do have over 15 gigs of installed wind capacity over the footprint. Through the year, we have 38 new wind projects. A few of these have already come online, but total we have 38 wind projects scheduled through the end of the year, and the majority of these wind projects are focused in West Texas and the Panhandle. So what Rod alluded to earlier with some West Texas wind driving congestion, that's definitely going to be an issue that's going to continue moving forward as we add all these wind farms in a very tight geographical area. Any small spatial miss in the wind forecast will translate to potentially the big changes in pricing. So we have a lot of wind coming up in West Texas. That's definitely going to impact congestion patterns. And yeah, so we have a lot of wind. Spring also usually features the strongest wind of all seasons. Our current wind record is right around 14 gigs, plus or minus a few hundred megs. And considering we have more farms coming online and considering how windy spring typically is, I think we're going to continue to break that record several more times through spring. All right, we'll bounce a little bit back talking about demand here. So shifting back to demand. The graph to the right shows demand from the last spring, March to May, from left to right. And the trend that we usually see is demand holds relatively weak through March and the first couple weeks in April. Temperatures are usually relatively comfortable, generally upper 60s to low 80s. Humidity is not all that intense. And cooling load is usually relatively weak. Heating load dissipates, cooling load is still weak. So overall, demand is usually weak March and April. May we start to see temperatures get warmer. That's when we start to see stronger cooling load. And as a result, as you notice, that best fit line really starts to trend up as you head towards the right. That's your cooling load building as we head into May. And the bottom left, we do have a table. We have our monthly peak load forecast. March, we're only going 44 gigs. We're going well below normal, and that's due to a very warm start to the month. The March demand peaks usually in the first week of the month, usually driven by heating load. Temperatures are 10 to 20 degrees above normal. We are not going to see that heating load. So we are very bearish for March, generally in line with your average demand for April and May. And we do have our spring peak load forecasted in May at 54 gigs.
Thanks, Josh. So with that, we're going to hand over to Keith, who's going to talk a little bit about generation and transmission outlook for ERCOT in the spring.
Great, thanks, Rod. Yeah, as Josh said, our slides are a little bit out of order, so just do bear with us. First, taking a look at this pulled right from the SARA, the Seasonal Assessment of Resource Adequacy. Main points to note here would be the total resources. Currently, ERCOT's telling us that there's about 78.2 gigs of resources available to us this spring. You can contrast that with 2015. 2015, we saw right around 76.6 gigs. Next couple things to note would be typical maintenance outages. So ERCOT's telling us there's about 5.8 gigs of typical maintenance outages during the spring. Forced outages coming in right around 3.6 gigs. Again, you can contrast this to 2015, about 5.2 gigs for maintenance outages in 2015, and right around 3 gigs in 2015 for forced outages. So this gives us a total resources net of historic average generation outages right around 68.7 gigs. All right, popping over to the next slide. All right, sorry about that. So we took a deeper dive into this, and we took a look at this, and essentially what we're saying is ERCOT's telling us the typical spring outages is about 9.4 gigs. So what this infographic tells us is that, I think they might be understating it slightly. So essentially what we did was we went back and looked at day of generation outages, and then we rolled them up per season and looked at the average for 2012, 2013, 2014, 2015. And what it's telling us is, we're seeing a higher number. So it's coming in a little bit stronger than that, right around 12.6. ERCOT's telling us it's about 9.4. So, as I said, I think ERCOT might be understating these numbers, but that remains to be seen. Again, this was all pulled from the SARA and then from the day of generation outages. All right, so the next thing would be resources that should be coming online in 2016. Now, I label these as resources. We only have specific capacity numbers for 3 resources. I'll get to that in a second. But right now we see that there's 58 resources that are planned to come online with executed SGIAs. Again, that's sorry about that. Standard generation interconnection agreements. So right now we see that there's 6 gas units, 14 solar, and 38 wind. As Josh alluded to before, the bulk of that wind is going to be in the Panhandle and out west, and then gas is kind of all over, and then solar, most of it again is out in the west. Now to give you a little bit idea of scale, you can see Baffin Wind, this facility on the coast, is at 202 megawatts, and Los Vientos 5 is 110, while Barilla Solar is coming in about 7.4. So again, that speaks a little bit more volume to the scale we're seeing. And then with respect to seasonal mothballs, right now there's 820 megs of coal, Martin Lake 2, that's scheduled to be mothballed this season. All right, let's talk a little bit about congestion. So for congestion, these are some of the main congestion points that we want to make note of. The first one would be Valley Import Interface. So Lawn Hill to Nelson Sharp. So Valley Import Interface is bullish South Load Zone and South Hub. The last time we saw Lawn Hill Nelson Sharp go out was October 28, 2015. Now the reason that's important is because North Hub and Load Zone during hour ending 15, when we saw Valley Import post, was trading at right around $23. Now what we saw South Hub clear at $90, and we saw South Load Zone clear at $230. So these 5 days that Lawn Hill to Nelson Sharp are going out from the 7th to the 11th of this month, could have drastic effects on South Load Zone and South Hub. Other thing to note here would be, as far as we understand, the normal limit for Valley Import Interface is about 2.5 gigs. When Lawn Hill to Nelson Sharp does go out, they drop the limit of that line just to about right around a gig. So it makes the flows along that line that much more sensitive. All right, for Los Fresnos to Loma Alta, the lines on the right-hand side, we've kind of listed them out. Laurel to La Palma is going to be going out, intermittent over the next couple months, as well as Laurel Pete Isabel. That's going to be going out for 19 days. And what we tend to see is that when one of these lines goes out, and let's say it's a weekday, so there's higher load, and temperatures down in Brownsville get below 50 degrees or above 80 degrees, we tend to see this post, congestion post at Los Fresnos to Loma Alta, kind of like what we saw earlier today. So, this is definitely a good one to watch out for, and we've listed all the days. Again, this is bullish South Load Zone, and one of the things, the only way you can really solve for this congestion is by ramping up Silas Ray. So, if Silas Ray is not running, or if it's not running strong enough, we do see this congestion post, and it posts pretty strong. And the last one we're going to go through would be Jewett to Singleton. It's only going on outage for 2 days in April. It's the parallel line outage for Jewett to Singleton. Again, that's bullish Houston Hub and Load Zone, and bearish North Hub and Load Zone. And we tend to call for this when we see high winds, preferably in the north, as well as some compression with respect to loads from the coast and north. So we like it even more if let's say coastal load is higher than north load in our forecast. We really like calling for this, and we can see a decent amount of congestion post here. So that's what I had from a congestion standpoint. Last thing I'm going to run through are some of our most frequent wind risks. As we see here, the orange line is essentially telling you which ones post with the highest average shadow price, and the blue lines tell you which one has the most intervals. So essentially, Javelina Tapna Molina, the one on the bottom of the list down in the south, that posts the most amount of times, but as you can see, the average shadow price when that does post is none too significant. And, one of the trends we're kind of seeing with this list is, in the south, they may post with more frequent intervals, but it doesn't seem like they hit as hard, as opposed to in the west, if we use a SCOTA switch to Trent, which posts pretty infrequently since January 1st, it only posts seldomly, but when it does post, it posts with pretty high shadow prices. So this is just one of those things to look out for. You'll see if you follow our reports pretty frequently. We're constantly calling for these, depending on how wind patterns are showing up. So these are just ones to look out for. And again, just to iterate, this is just what we've seen so far from Jan 1 until now. So, Rod, back over to you.
Thanks, Keith. All right, so just to summarize some of the stuff we talked about. So just going back over the winter, I mean, we all know very mild conditions. That combination of high wind, low loads really driving that weak pricing overall, but we did continue to see wind setting new records and driving some of the most volatile days. So really all around wind. Each of those price spikes that we saw were really driven around wind generation, missing forecast. So again, I think going into the spring, that continues to be probably the biggest risk on a system-wide level. Just in terms of our demand outlook, Josh is looking for cooler and wetter conditions to really persist through March, April, and May. Could start to get interesting as we get a little bit of cooling load towards the end of May. In terms of generation, it's a bit of a mixed outlook. So historically, high wind generation during this season, coupled with the record wind that we're seeing come online, I think we're going to continue to see the pattern of volatility around wind ramps that we've been seeing over the past few months. I think also as well, you could potentially see a higher generation on outage number. A lot of kind of opportunity outages, as we would call them, with generators who may not be being picked up on a regular basis, taking the opportunity to do some maintenance work ahead of the summer. In terms of the congestion outlook, again, it's mixed. We've got line outages, and this is in terms of North Hub specifically, but South cooling load may continue to drive some of the strength that we've been seeing around that Silas Ray point, particularly with the Loma outages that are going to be starting again. North to Houston flows always on our radar when we have that strong wind. I think if we do start to see more gen outages or those opportunity outages, especially in Houston, we may see some pressure on the stack there. Some of those high wind days creating a bullish Houston, bearish North. Looking at also large opportunities for those wind-driven risks that we've been seeing in South and West throughout the spring. So again, those outages that Keith, those constraints that Keith walked through in terms of wind constraints, those are really going to be the short-term constraints that can have a significant impact, particularly in West, really as a result of short-term line outages. So with that, I just wanted to talk briefly about some of the new modeling capability that we're going to be rolling out in ERCOT. This is the SEER model. So this is a model that we currently have active in a number of our other regions. So just to walk you through kind of a high level of what SEER essentially is, it's really it's a fundamentals-based priced and power flows model, very similar to some of the modeling capabilities that Genscape already has. Essentially, it replicates the security-constrained economic dispatch model that we currently have, and it's really the engine, if you will, behind a lot of the Power IQ and Power Buy price forecasts that you're familiar with. We're going to be forecasting those hourly prices for all the hubs and all the load zones now. Goes out BAL day, real-time, next day, DAM, includes scarcity pricing, and obviously utilizing the back-end capability in terms of real-time monitoring. So a couple of, just to walk you through the inputs. So again, it's those fixed constant inputs, the generating units, buses, branches, our load forecasts that Josh is providing, wind forecasts as well. Some of the key changes as well, we're adding the non-opt-in entity load zones, so AEN, CPS, LCRA, and Rayburn. Those will be actually priced on a BAL day, next day real-time, and next day ahead. We're also going to be actually modeling shadow prices for each constraint in the reports and in the model itself. So just walking through, you guys are probably fairly familiar with our demand and forecasting. Josh is one of a number of our meteorologists who's creating those daily forecasts on an hourly basis, and really as a comparison to the ISO, we're using the ISO's inputs for our day-ahead forecast. We're running those against our real-time model for the next day with Josh's forecast. So seeing those dark spreads and creating the difference there. Bid analysis, as you're aware, a lot of work's gone into the bid analysis around the ERCOT units. We have the ability to set those units multiple bid strategies. A key part of this is the recalibration process that we have with the Genscape Power RT, and that is loaded in on the recalibration level and then moved into our BAL-day and next day reports. Some of the new things that you're going to see in the SEER report is flow gate limits. So we create flow gates and essentially paths in the model to create congestion. So we can actually redispatch on multiple congestion points as opposed to an overall point. So one of the things you're going to see in the new reports is, rather than just analyst calls on constraints based on line outages, you're actually going to see the modeled constraints on a constraint by constraint basis as the SEER model calls these. Well, so that's really kind of an added level of congestion analysis in the SEER model here. And then just a couple of ERCOT specific features. So obviously we're looking at the COP, we're looking at that surplus capacity. ORDC calculation is in there for the looking at scarcity pricing. Certainly becomes more of a risk as we go into the summer. We're also recalibrating not only on Genscape previous day output from generators, but we're also recalibrating based on the day ahead commitments from units as well as published by ERCOT. So again, that extra level of visibility that's going into the model. With that in mind, I just wanted to briefly talk about our energy forum we're going to be holding in Chicago on April 21st, 22nd. We really encourage you to join us. All the team leads will be there. We'll be talking about, it's a 2-day oil and power and gas, different tracks. We'll be talking about our summer outlooks, and you get a chance to meet the team, ask us any questions in person. There is actually a discount code if you, there's a special client discount code if you want to sign up for that. We will send out that code with the slides. And with that, we're going to take a break just to review any questions you might have had, and then we'll be back on the phone shortly. Thank you. All right, couple of questions we had here. So firstly, there was a question with regards to the weather outlook. Why do you still believe the spring 2016 will be cooler as a result of El Nino, given the past winter was warmer? This is one for Josh.
Yeah, that's a great question. We've definitely seen that trend of conditions verifying warmer than expected. You know, the reason why we kept some of those marginal cool anomalies in, we only went about 1 to 2 degrees below normal, so we're not going drastically cooler than normal. But the reason why we kept those anomalies in is if you look at the majority of climate model guidance, including the CFS, the Euro, and the NMME, and when you look at our analog years, 1958, 1998, and 1983, if you look at all these collectively, they pretty much all point at slightly below normal temperatures. So we don't have a lot of indications from the climate models or from our analog years that we're going to see really warm temperatures through spring. But you know, your point is definitely valid. You know, we made sure to make a note in the outlook that if our outlook is wrong, it's likely to be in the warmer direction. So I still feel pretty good. We're going to see temperatures being a degree or two below normal on average but risks are definitely warmer. And again, there's the majority of model guidance is hinting at slightly cooler winter conditions. So yeah, that's kind of our main strategy. When we form our seasonal outlooks, we like to look at several different things, but our analog years and what the climate models are saying are usually the top two things we look at. Yeah, so that's kind of the basis behind our spring weather outlook.
Thanks, Josh. And Keith, I think we had a question about looking for some of the capacities behind the additional generation coming online, as opposed to just the number of units.
Yeah, so thanks, Rod. Unfortunately, the SARA, as it currently stands, only lists out the number of units. So, the only three that we really had was that Baffin, Los Vientos, and Barilla Solar. So yeah, I mean, we would love to put them on here as soon as they come out from ERCOT. But as it stands right now, all we have are the unit quantities and those three individual capacities.
Thanks, Keith. And we'll keep obviously keep updated as and when those units come online. So I think that wraps it up for any questions on the phone. Our contact details are there. If you do have any follow-up questions or comments, we'd love to get your feedback on the presentation. With that in mind, I'd like to thank Keith and Josh for the content for the presentation. Also, big thanks to Amanda Lake, our marketing manager, for coordinating this. Thanks for your time, everyone on the phone, and we look forward to hearing from you soon.